Good morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Thursday, February 20th. Well, a mixed trade here overnight, mostly higher as we rebound from yesterday's pullback. Corn right now is 1 to 3 better, led by old crop. March currently straddles at $5 level. And the soybeans were running about 3 to 5 better, led by old crop. And the products steady to about $1 lower here in the meal, while bean oil prices are up about 50 points. And wheat ranges really from steady to about 7 or 8 higher, led by strength in Minneapolis futures. Speculative traders, there were modest sellers across the egg space yesterday, with the exception of meal, where they were net buyers of just over a couple thousand contracts. Open interest was a little bit higher in corn and in bean oil, however, lower pretty much everywhere else as we go through the liquidation of the March contract ahead of first notice date late next week. Fresh news somewhat scarce this morning in the outside markets. Energy prices right now are slightly higher. The U.S. dollar is slightly lower, while major stock indices are also slightly lower, pulling back from all-time highs yesterday. Record close for the S&P 500. We do get our weekly ethanol production figures later this morning. Expectations are for modest pullback from production the previous week. Last week it was 318 million gallons, so look for a slightly lower figure today. Overall production continues to run well above the pace needed to reach the current USDA usage forecast of 5.5 billion bushels. Much of Argentina will be dry and very hot over the next week, particularly across the northern growing areas, as crop stress there will be back on the rise. Rain is expected across some of the southern growing regions this weekend, gradually shifting north middle to late next week, which will provide some relief if verified. Recent rains have slowed down soybean harvest and corn plantings across the center-south region of Brazil, along with northern Mato Grosso. Central and west central regions, including southern Mato Grosso, continue to see pretty good progress as rains here have been much more scattered. Extreme cold across the nation's midsection here in the U.S. will gradually give way to above normal temperatures by late this weekend into the early part of next week, particularly for the western Corn Belt. Not a whole lot of precip over the next week across the midsection of the country over the next 5 days. Some scattered showers leaning towards the eastern Corn Belt early to middle part of next week. Inside trade for corn overnight as we await the late week usage figures. Significant resistance does rest for the spot March futures right around that 508 to 510 area. I do think strong demand should limit the downside into early March, when the market's focus will begin to shift towards the U.S. growing season and the likelihood for a 2 to 3 million acre increase in U.S. corn acres in 25. Spot bean futures look stuck right now between 1025 and 1050. Support rests below the market. The 50 and 100-day moving averages converge just above the 1020 level for that March contract. To me, the upside would appear to be a little bit more limited, with South American harvest really starting to hit its stride. That said, however, cash basis levels are seasonally stronger than they are usually at this time of year, so holding futures up here a little bit. Spot bean oil did reject trade over 48 cents yesterday before pulling back. We did hold support at 46 cents. We're setting up a little bit of a bounce this morning. Meal looks stuck between $290 and $300. I do look for a breakout to the downside here. And wheat prices, they've stabilized after yesterday's sharp pullback. However, the recovery has been limited. Drought conditions across the northern plains, I think, is becoming more of a concern as we head into the spring planting season, which is giving the Minneapolis futures a bit of a boost. Thanks for listening, everyone. Have a great day.